We survived to our last session. Certainly not our least. I'm actually quite excited about this one. That many people are, of course, talking about liquidity as the thing when it comes to tokenization. And we're going to talk about, obviously, some of those mechanisms as we promised. But we've got a special treat for you where we're going to be hearing from Centrifuge, which is a whole different approach to this market that's quite unique. I'm looking forward to diving into it with Colin. But first, we mentioned earlier, Peter, there are a number of different ways that people are taking advantage of this tokenization from a liquidity perspective. Let's run through them.
Sure. So we see the most common, obviously the holy grail is at the end of the day, listing on an alternative trading system or an MTF, a digital securities exchange, depending on your jurisdiction, but really this is the secondary trading venue that people think about when they hear, tokenized real estate, tokenized private equity, whatever. And it's definitely interesting. It definitely takes some legwork to get there. There are a number of listings as precedent, so it can be done. I think to really unlock liquidity, and it seems to be a more common theme these days that people are realizing, people meaning issuers, other platforms, industry providers, whatever, saying it really depends on how much we're actually disclosing on our, let's say, underlying asset performance. Are there big events that will actually incentivize trading? This is where the idea of, should tokenization really focus on real estate and PE funds that are more or less kind of slower vehicles, or should it focus on like sports teams and esports and anything kind of in the digital realm that has a lot of news that could come out kind of at any time? And all of a sudden that provides something for people, investors, maybe Herwig and myself, to trade against. But all that notwithstanding, there's still some solutions that could be put in place no matter what. And a couple of unique things that we see even, companies will sometimes offer the ATS approach for full listing, where they're actually the ATS venues matching orders on behalf of, aggregating all these client orders, bids and asks, buys and sells, and kind of matching those orders like any other venue would. Think of a NASDAQ or a large exchange, a marketplace, and that's what people tend to think of. But rather, the mid-ground may even be more of like a bulletin board approach, whereas maybe Herwig has 100 tokens, and he's just letting the world know, the world meaning other permissioned buyers, investors, holders, that, hey, I'm willing to sell, 10 of my shares, and I'm willing to take, $10 a token. And then should I come in and see, and I like that bid, maybe I'll accept it. If not, maybe it'll just sit there kind of. And it's not really like we're trading actively, but rather, okay, I'll grab his shares and boom, we just made a deal kind of right there through the bulletin board. This is nothing new per se, but rather we know, and what we've been talking about this whole time, technology wise, it can be facilitated quite quickly. Instant settlement, basically an atomic swap. I heard that word a couple times last 2 days. Always a great term. But this is like something that, is like a stepping stone to the full secondary trading marketplace that everyone's kind of after. And then, should you even get that far for a listing, a big question is how much volume is really happening behind the scenes, how many organic investors are really coming and trading, whether buying or selling in either direction. And something that needs to really be done. And, we preach this to our clients on the advisory side of STA. You really should have some sort of some sort of issuer managed liquidity if you can. The original goal, and maybe that's something we can get into a bit more with Colin soon, is even offering lending against your tokenized assets, your security tokens, to some way, shape, or form. You're not trading, but rather you are getting liquidity in the form of a loan. And so, slightly different ball game, different risks, different things to be aware about, but that's par for the course, in this world. But rather something immediate is looking at yourself like a public company, if you will, offering maybe share buyback provisions, tender offers at certain prices. You can retire tokens. We've seen that done. If you were to get acquired, essentially the acquirer is buying out your token stack within the capital stack. So all these types of methods and kind of ways to at least provide liquidity potentially to your investors to give them some sort of confidence that their token is not just going to fluctuate with the wind, if you will.
Yeah, no, I think that's a great summary. I think I'll kind of point out where we are in this evolution of everything. I think no one's trying to hide the fact that the ATSs, these brokerage platforms, they've been on a journey, on a mission to build, robust liquidity on their platforms. But today it's not quite there. The volumes aren't there. And so we know that that's not necessarily that full liquid solution. And therefore there are capabilities thanks to tokenization that make it super easy for an investor that if I'm on one of the platforms, I know Peter, his wallet or his identity, and we can make a trade thanks to the technology rails that we're both on, making it super easy for the issuer not to get involved. And that's a key between bulletin boards and some of these other use cases where, again, there are certain licenses needed to get involved in certain liquidity activities like this. So a bulletin board by design is like a free-for-all for permissioned individuals to trade with one another without intervention from any third party or from the issuer. Whereas I think that buyback model really is something that is not common, but we'll start to see become more common, because even doing buybacks or some kind of treasury management program for the shares, that's, again, so much easier to set up thanks to this technology that before you just really would never do it. And that's why I think we've been hearing all throughout the conference, the future angle of liquidity that I'm super excited about is without a doubt leverage. We saw this in traditional markets, real estate being a very illiquid asset, very, very deep lending industry behind real estate because of this, to enable liquidity, not through trading, but through leverage. We see this in crypto. We saw the rise of DeFi and how lending basically created a whole new life for the industry and use case to focus on. And now with tokenization for real world assets, for asset-backed securities and things like that, we now have a real opportunity to leverage this technology in this use case as well. And so we're going to start to see more and more of these platforms and partnerships form, so that if you decide to tokenize there, you're going to be able to hopefully tap into a lending solution like that for liquidity. And with that, I think that's a great transition, right, Peter? Let's bring on Colin from Centrifuge. They're really bringing on a whole new spin to everything. As he joins us here, I want to remind everybody that we talked about the primary market, how we tokenize, how we raise capital through that process. And we just talked about the secondary market. Oftentimes, there's actually a restriction period where there is no liquidity whatsoever from the primary to secondary. Again, there's issues with creating that secondary liquidity. Let's take a moment to understand a little bit more about how Centrifuge plays in this whole space.
Yeah, absolutely. And Peter and Herwig, thanks for having me. Peter, you said two things, and you as well, Herwig, that I just want to point out, which I think is one, kind of secondary market liquidity as like this concept of the stepping stone, right? And I'll address that in a moment. And then the second piece was just this idea of licenses, which I'll speak to as well, because we try and stay far away from that over on the Centrifuge side. So Centrifuge is a DeFi protocol, and what we are aspiring to be is the institutional platform for credit on chain. Now, as a DeFi protocol, what we're focused on is providing the necessary asset management infrastructure for issuers to tokenize and securitize a credit offering into 1, 2, 3, as many tranches as they'd like, and then issue that investment on chain. Through the Centrifuge protocol and through our platform, through integrations that we have with partners like MakerDAO and Aave, an issuer, a credit fund, an asset originator, an asset manager, then has the ability to access kind of the world of small but nascent and growing on-chain capital markets via Centrifuge. Now, like you've said, I think it's important to point out that as a DeFi protocol, we don't really have licenses, right? So there is no secondary market trading involved or around the Centrifuge protocol. And the second piece is that most of the tokens that are issued today on the Centrifuge protocol are either Reg D or Reg S security tokens. So very much in line with a lot of the language that you guys were just using. From a story and a history perspective, Centrifuge has been around 6 years. I would say we're probably the leading real-world asset protocol in DeFi at this point in time. And we're most known for our relationship with MakerDAO, the largest decentralized stablecoin, DAI, which I think is hovering at like 6 and a 6.5 billion right now in circulation. And then also a relationship with Aave, which is also a pretty well known household name in crypto.
It's an impressive ecosystem you've built. Pretend that, I'm brand new to tokenization. I've heard all this talk about, the capital markets and Wall Street kind of transforming, but you're absolutely coming in from a different angle. This term DeFi even scares a lot of people. You've done a lot of work to make this mechanism in place. Tell us a little bit more about how you're capturing this new audience to come to Centrifuge.
Yeah, so I think where I am finding, or where we're seeing a lot of the interest is, I think on two fronts. The first is a key partner and investor in the Centrifuge protocol is Block Tower. And over the last 6 months, they launched, well, even longer than that now, they launched the Block Tower Credit Fund. And that is using the Centrifuge protocol to issue and manage traditional structured credit. The reason they use the Centrifuge protocol is because they were able to access and tap into MakerDAO liquidity there. And so MakerDAO actually provided Block Tower with a $150 million credit line for their credit fund. It's kind of like the sole sponsor of their credit fund. I think that's an important and kind of a defining story for two reasons. One, Block Tower for me, and I think for a lot of the people in our industry, it represented conviction around what a DeFi protocol can do, right? Versus having to go through, if you think about like kind of the macro conversation, what we saw over the last 2 or 3 years is this conversation around very insular private blockchains, right? Built within banks or built within TradFi, but just using blockchain technology, but in a very traditional manner. By Block Tower kind of adopting our technology, incorporating it and using it to launch their own credit fund, I think it showed people a pathway, right? That this can actually be done, and gave some of the more traditional issuers and asset managers just a heads up that it can be done. It's not, it's not easy. It's not right out of the box just yet, but it can be done. I think the second thing that it kind of proves out, and I'm seeing this happen time and time again, is this idea of growing capital markets on chain. Again, with everything that's happened in crypto over the past 2 years and where interest rates are and where the world is broadly, crypto capital markets are probably the last thing on people's mind. But when you think about any good asset manager or any credit manager, especially the smaller ones, right? 200, 300, 400, $500 million in AUM and trying to grow, they're going to have to be innovative in order to compete with your large, massive, multi-billion, 10, 20, 40, $50 billion credit funds that are out there. And those innovative credit managers, we're talking to them, right? And I don't think we're the only ones talking to them. I think there's a lot of DeFi protocols talking to them because they're willing, I guess, to go on the journey, right? And go through the effort of understanding how these capital markets are forming and how to access them via these tokenization platforms for primary issuance and investment from these parties, because it kind of gives them a pathway and a potential leg up should markets correct, or should they be able to open up relationships in the way that someone like Block Tower has with MakerDAO.
That's really illuminating. If I get that right, depending, of course, on the exemption that's used, I'm able to go to Centrifuge and participate in something like the Block Tower credit fund, and then I can actually leverage that with, say, MakerDAO or Aave. Is that what I'm getting right? Or
so this is where the simple use case is to structure credit using the Centrifuge protocol. So you can open up a simple senior junior tranche of an investment vehicle using the Centrifuge protocol. And now that investment is available on the Centrifuge blockchain and through the Centrifuge application, you then have the ability to access any investor that's used that is crypto enabled. But you're typically only going to be accessing accredited investors that are KYC'd and AML'd, right? And the reason for this is because depending on the issuer, right, or the quality of the asset originator, the manager, or the structure of the investment, they're probably issuing Reg D or Reg S securities, right? And so it's only going to a KYC'd AML'd audience that is typically accredited. there isn't leverage on these tokens right now from a centrifuge perspective. And these security tokens, people are simply holding them for principal plus interest. I can tell you that, you know, when it comes to liquidity, I think this is the conversation that I would say precedes any conversation around asset management infrastructure, right? It is, if we're going to use a tokenization platform to come on chain, we need to know first, from a primary capital markets perspective, what's the ability to access capital on chain? What does that look like? How do we do it? It's so different than the way we have traditionally thought about this. Who do we engage with? How do we engage with? It's a bit opaque, and I think that's an effort by the industry collectively to try and make it a bit more clear how to come on chain and kind of do it yourself, if you will. But then really the second piece is, and this is a question that doesn't really come from the sell side, but it comes from the on-chain buy side, right? So if you're any type of on-chain investor, right, given what's happening in crypto and given what's going on with rates in the market environment, you want liquidity. And so it's very hard for these longer dated, longer term, esoteric private credit, long tail investment offerings to find demand on chain today without an investor having secondary market liquidity around that asset class or around that investment offering. And markets, I think, are far more hard to create or take longer to create, perhaps. I'm not a technologist, so I shouldn't speak to technology, but creating these markets, kind of the point you made, Herwig, around the demand, right, or the amount of flow going through the ATS and the bulletin boards, right? I think that's a really big question for the on-chain investor right now. What kind of liquidity exists if I buy into this, you know, 1 to 2 year dated or duration product, right, where there is no redemption within the 12-month period? Like, what am I really signing up for? What's going to happen in the next year? How do I get my head around that? How do I make a good investment decision here without any liquidity around this investment? So for me, I think if in order for the tokenization of, you know, traditional assets on chain, which we call real world assets, to really flourish, secondary market liquidity is absolutely critical.
Yeah. What Colin, do you know what the, I don't want to say average deal size is through centrifuge, but like any insights on the investor profiles? So not even the issuer, but, you know, what the actual buy side, the demand side looks like. Very curious. I think a lot of people are curious in general. Like, the common question, who's buying these money market funds, who's buying these treasuries? We got some insight yesterday. So I'm very curious from your angle, if you guys see any profiles or recurring themes.
Sure. I mean, I think as much as we all like to talk about like the institutional adoption of the blockchain or crypto, that's not happening right now, at least on the buy side, right? So anyone that's thinking about this as a pathway to innovative or risk-seeking institutional investors, which I guess doesn't even really exist, right? Like risk-seeking institutional investors, that's not really happening right now. I do think a lot of the pathways to on-chain capital markets right now are through ecosystem type partnerships, right? So you can think a lot about the treasuries of some of the DAOs that have been amassed over the last 2 to 3 years, right? And some of the protocols that exist. Some of the ecosystems are rather large. Like, it's probably been discussed in the past 3 days, guys, but even someone like Avalanche and their Vista program and the $50 million offering or kind of investment fund that they've put together. There's I think these types of ecosystems, Base, Polygon, Arbitrum, all of them kind of represent not only blockchains, whether they be L1s, L2s, or otherwise, that have been successful in front of kind of your traditional blockchain venture capital crowd. They've also built incredible networks of users that also have their own pockets and pools of capital. And one of the beautiful things, well, I guess not beautiful, but I guess just like an outcome of what's happened over the past 2 years in crypto is that because of yield has been hard to find on chain, it's created a vacuum for yield. And so, like you said, like these tokenized money markets, these tokenized treasury offerings have flourished and quite quickly, relative to the rest of the market. And I think that represents that the capital is there. And I think our take at Centrifuge is that even with treasuries, right, as markets, as rates correct, right, I think we still have a lot of work to do to close the educational gap and the understanding gap between kind of the way the crypto native on-chain investor thinks versus the way the traditional off-chain investor thinks. And just to narrate that for a second, the traditional off-chain investor has access to the entire world of investments, right? So when they look at crypto, it's just the smallest slice of the entire portfolio of assets that they could be investing into or building. Your on-chain investor is to some degree limited, right, by what's tokenized and what's brought to them. And so as a real world asset platform and as a tokenization platform, we feel a compelling kind of like reason to not only spend the time bringing the assets on chain and helping build the technology and the ecosystem around those assets for the primary issuance, right? Because that does feed into the secondary markets that we're talking about here and that liquidity, but also spending time with your, the on-chain crypto investor that's trying to get up the investment management curve and understand a bit more about what real world assets are and how they can access them in a reputable way.
Naturally, you're building a marketplace of sorts by catering to multiple sides here. What is your biggest focus for 2024? Is it providing more credit options and working with more issuers to make that available to investors? Is it attracting more on-chain money to the platform? What would you say is the most important thing in order to kind of move your vision forward? Perhaps even liquidity and sort of figure out those partnerships somehow. What would you say is your biggest priority?
I think the first thing is we want to be the most trusted place for your crypto native on-chain investor, not retail, not an individual, but a true organization, right? Some organized pocket of capital to feel that they can in a safe and methodical way, make an investment decision into a real world asset investment through the Centrifuge platform. That's kind of, I think, step one. I think step two is making sure that Centrifuge is available wherever those investors want to access it, right? So there's so many different blockchains, there's so many different ecosystems, and they'll only proliferate over time. They'll all be interconnected and composable. But the investor is ultimately going to want to experience and allocate the assets in a way that is most comfortable and most and within their own environments. So we need to meet them where they are. So bringing Centrifuge to them versus asking them to come over to the Centrifuge chain or the Centrifuge application is the second key driver. And the third thing is when you think about the types of assets that sit on Centrifuge, the issuers that are issuing those assets and how it's being managed, how transparently what legal is underlying the investment itself, what kind of service providers, right, that you would expect in any traditional investment class, whether if it sits out off chain, is around that investment, making sure that's as institutional as possible and that the assets are of a quality that would meet an investor's demand. And the final point is just making sure that the platform itself as Centrifuge is completely diversified from a risk return spectrum. So you can access different asset classes in different jurisdictions across the yield and across the risk curve.
Yeah, do you think there might one day be something like a basket product, or just because of how easy it is to pick and choose, there really isn't any need for something like that?
It's funny, I think about that and I think about secondary markets, like a basket or like an index, right? I think about those as, do you build it yourself or does someone build it for you? And you just try to be the best underlying in that case. I think that's a real, a buy or build question, not us buying, but I guess like partner or build it yourself, if you will. So I'm not sure, but I do think there's already a couple of products like that and a couple of different businesses going at that model. I do think that model right now, I'm sure it's a bit of a timing game for them, much like it is for the ATSs, right? And what you spoke to about how much flow is actually coming through here. How do we generate more flow? For us at Centrifuge, before we get to those questions, we want to have the right partners in place as we grow and as we scale. I think it's most important to think about how do we just tokenize and bring the right investments on chain at the asset level to fuel the ecosystem. Because ultimately, whether it's secondary market trading or index building or basket building, it's all going to be dependent on the quality of the assets and how they're issued and how they're managed.
Absolutely, the quality and the number, which you're clearly focused on increasing. So that I think organically that would eventually, whether you do it or partner up, I would imagine that would be an inevitable growth to help even further, maybe with the liquidity or accelerate that industry. But I think you're right, you're spot on. And this is just to highlight to everybody, that's how early we are. And you know, centrifuge is right in the thick of it. I don't even want to go into the regulatory challenges of how you've managed to make this platform so that you know, even accredited investors as well as international can participate. I'm sure one day y'all will figure it out too, to make it retail US as well, if you're not already. But you know, we don't have too much time left. Is there anything you want to share with the audience you think they should absolutely, you know, take away that you haven't been able to cover yet?
I think the only thing I would impart to the audience is that I actually think most of the actors inside of DeFi, right, and most of the crypto native groups that I know and work with every day are really putting their best foot forward to try and do this as buttoned up and as institutionally sound, right, and to fit within the jurisdictions or the regs or you know, the policies within whatever country or region of the world that they're operating within. And for those on the call or for those here that are more traditional in nature, you know, we need your help. Right? If you actually believe in what the technology can do, and you believe in what you know, things like the blockchain and smart contracts and all of these different pieces of the technology stack can do, we need more institutional thinking. We need more institutional rigor, and we need it across the board. And you know, one thing I would encourage people to look at is something that's called the Tokenized Asset Coalition, something that we've, you know, launched and, you know, are welcoming any and all to kind of help us think about, which is just how do we build the right frameworks and the right institutional practices within crypto around this tokenized asset movement to really scale it over the next X amount of years. So, and really appreciate you guys having me on today. It's been really great, and appreciate the questions and the platforms. Thank you.
Appreciate you being able to join us and give us that insight. I think that's a fantastic message, right? It's even with the whole industry, you know, we've been afflicted by bad actors and the lack of, you know, regulatory modernization or just even understanding to catch up to it. But DeFi is totally doable. The technology is phenomenal. Centrifuge is already doing it. So absolutely, institutions, please hear Colin's call and come learn about how this technology works and come leverage it. Come check out Centrifuge. With that, we're going to wrap up Tokenize this in just a few minutes. Thank you again, Colin, for joining us for our last session here.
Thanks, guys. I really appreciate it.